Hello, hello. Welcome to this Saturday live stream. It's good to have you back. We were here 7 days ago, and thank God we're here, or we can be here again 7 days later. Just so much going on in the world that you really have to wake up in the morning and thank God that the house is still standing, that there was no earthquake overnight, mudslides, floodings. I mean, think of the people in Florida. They were sleeping and just everything just collapsed on them. So it's good to be back. Yeah. In a nutshell. So let me know who you are. Let me know if you're here. Let me know where you're streaming in from. I'm always so nosy. I always want to know what country you are streaming in from. I'm based here in the United States on the East Coast. Thank God we don't have earthquakes on the East Coast, but I think it was like 7 years ago maybe, there were actually tremors felt. I still remember. It wasn't quite an earthquake, but tremors felt on the East Coast, the New York area. I remember exactly where I was, and I thought it was my kids playing rough in the next room, to find out it had been a mini earthquake. So yeah, you gotta be thankful for life. Let's know where you're streaming in from. What country are you streaming in from? How long have you been trading? I am so nosy. I like to know that kind of stuff. Hit that like button whilst you're at it. That really helps my channel grow. Let me know if you can hear me, if the sound's okay. Sometimes I have issues with the sound. And without further ado, let's get right into it. Only enter your trades on these 3 breakout strategies. Literally. I mean, if you know of any other strategies at the end of this live stream, enter that strategy in the chat box. I'd love to know how you enter into your trades. You must have a system for entering into your trades. Let us know what they are. So I'm going to go over 3 of the, they are breakout strategies, and they are candlestick patterns that I look out for before I enter a trade. Now, it doesn't even matter if it's a long-term trade where I'm not necessarily attempting to scalp or day trade or swing trade. I still like to enter into a trade on one of these 3 breakout strategies. So the very first one. Hi Mary, how are you? All the way from Lagos, Nigeria. Sound is fine. Thank you. It's good to know. I know there's a way for me to check on my sound, but sometimes I'm never too sure of what I'm looking at, as far as the audio mixer and all that technical stuff. So it's good to hear. Let's know where else you are streaming in from. YouTube has made the world a smaller place. We can live stream. We can be on extreme ends of the world and be connecting on one platform. That is the best of technology. So let's use it. Let's know where you're streaming in from. Anybody from Australia? I'd love to go to Australia someday. They call it down under, but it's not really down under. In fact, we're all down under, aren't we? Yeah, literally. Earth is down under the solar system. From UK, Tunde, good to see you. I hope you guys don't have floodings in the UK. I'm not too sure. I know it was Germany, Belgium. Did you guys have any flooding there? It's good to see you're safe anyway. The very first thing that you look out for, that I would look out for, let me see if I can get this right. I'm missing. So the very first thing is the breakout candlestick pattern. It's a breakout candlestick pattern. And so what I'm going to do is each time for each of these strategies, let's get rid of this one for now. So it's a breakout candlestick pattern. And for each time, I'm going to go to the same screen because, and I'm using Bitcoin. This is this morning's Bitcoin chart, guys. Bitcoin is doing stuff. And for whatever reason, I drew this on the 1 minute, but that's okay. As a day trader or as a scalper, your 1 minute is so important. Your 1 minute chart is so important because don't ever think of entering into a trade on the higher time frames. Don't enter in on a daily. Don't enter on a 4 hourly. Don't enter a trade on a hourly. Why would you do that? You want to enter. You want to zoom in on your trades, and you want to enter into your trades on your 1 minute and your 5 minutes. So here I have my 1 minute chart. Hi Zama from South Africa. Tony, it's good to have you back again. Yeah, so the very first breakout strategy I think I was talking about is the, let me see what I said. Let's go back. Let me make sure I'm talking about what the breakout. Okay, breakout. Okay, so the breakout strategy I think is pretty basic, guys. If you're not using it from today onwards, make sure you start using it. So what is it? And you have seen the blue rectangles. That just shows your typical breakout. I was trying to look for like images of breakout candlestick patterns, and I thought, you know what, let me just use patterns straight off the chart. Now this is a chart from earlier this morning. So assuming I wanted to enter into a Bitcoin trade, be it a futures trade, or be it that I just want to accumulate more Bitcoin. If I wanted to buy more Bitcoin just to hold, I could use the 1 minute. I may just, sometimes I just jump in, just depends on how busy I am. If I'm long in Bitcoin, because Bitcoin and all the cryptocurrency market have been trading at their lows, you know, to me, there's not much difference between 30K and 31,000. But, you know, it is good practice to enter in on a breakout. So I'm going to zoom in on my breakout here. I have 2 on this chart. And so you want to enter into Bitcoin, and we see that dip, nice dip, and we see the candlestick. This candlestick, by the way, is called a lower low green. Anytime you see a lower low green candlestick after downward price action, that's always a good time to enter into your trade. And you can see after this lower low green with the tail, price action moves up. Assuming price action moves up, you've missed it, and it starts, what's it doing here on this rectangle? It is consolidating. It's not going anywhere. It's just zigzagging, a little bit up, a little bit down. It's not really trending. Then the time at which you want to enter the trade with a breakout strategy is when it breaks above the line. So you would have drawn a line, a price line right there. It doesn't have to be a rectangle, just a price line. Always draw your price lines there. I use by the time I'm done with a day trading session, I've got these price lines all over my chart, because as soon as there is a move, and say I've missed that move and I was waiting to maybe increase my positions on a long position, I would create this price line, this white price line, and I would wait for that candlestick to break above it. Now, a point to take note of, which I tend to try to mention quite a bit, is always wait for your candlestick that breaks out to close. So each of these candlesticks are 1 minute candlesticks. So wait the 1 minute. Wait for the whole 1 minute and make sure it closes as this one has. Why do I say that? Obviously, you guys know this green candlestick in the first 30 seconds of the 1 minute can start off green, and the second half of the 1 minute, the other 30-second, it can end up red. Like, just go straight back into the rectangle and keep on. It can just, this baby here can keep on for days. It can keep on going sideways. It's not fun to get stuck in a trade where price action is just going sideways. You're not making a profit. You know, it's just not doing anything decisive. So always wait for that close. And in this case, we have that one candlestick. This second one, usually on the 1 minute, I will wait. Sometimes it's hard to wait, but as a trader, to be a successful trader, you've got to be able to wait. I am constantly training myself in the art of waiting. It is hard to be patient. You want to hit that trade, you know, everything's looking green. No, wait for the candlestick to close. So on the close of this second candlestick, then I would enter the trade. That's just to be sure. Now, it doesn't mean price action still can't retrace. It can't come back, but at least you're increasing your chances by waiting for a second candlestick to close. Now, if you're super conservative and you wait, you enter into a trade on a 5 minute, you want to be super sure that that baby is heading in the direction it looks like it's heading, then that's okay. Then wait for the 1 5-minute candlestick to close. Or if you trade on the 2 minute, wait for the 1 candlestick to close on the 2 minutes. Super conservative, wait for 2 candlesticks to close on the 2 minutes. And that's really how you maximize your trades and ensure that you're coming out of that trade with the most profit that you possibly can. I love my breakout strategies. I use them all the time. Let's go back and see. Second strategy. Now, I know some of you use these strategies. If you're there and you use this breakout strategy, just write breakout in the chat box. Breakout. Let's see those of you who actually already use this strategy. You already use this breakout strategy. It's a no-brainer for you. You've been using it forever. Good for you. Breakout. Anybody saying breakout? Nobody uses this strategy? Okay, from today on, ensure that you do. Tony, you don't use this breakout strategy? Okay, your second strategy is a crossover. Now, when I say crossover, some of you have, most of you, I won't say most of you should have, okay? But I hope most of you have heard of the golden cross and the death cross, because I have made a couple of videos on it and the importance of the crosses or the crossover. So again, we're talking moving averages. I forget who it was. Was it? I forget who it was last week who said he doesn't use moving averages on his charts. That's the most basic indicator. Like, if you use no other indicator, use your moving averages. The RSIs are great. You know, they give you a big picture. The RSI, the MACD, they're trend indicators that let you know, okay, trend is changing, we're moving in this direction. But to enter into your trade, you want to use your moving averages on the lower time frames. To enter, guys, we're talking about entering into a trade. To be certain that a trade is definitely trending in the direction you want it to trend, then make sure you have the crossovers on the higher time frame, on the monthly, on the weekly, on the daily. I'm going to move over to the charts and I want to show you. Okay, so before I show you something else, because I'm planning to show you the Bitcoin chart on the weekly time frame. I don't want to move away from this chart yet, but now we're looking at crossovers. So let's tighten this. Okay, so I have the green and I have the red, the green and the red. So with the green, we see my blue moving average is the 10-day moving average, and the yellow is the 20-day moving average. So these two averages, when any lower time average or any smaller time average crosses above any larger time average, so if your 20-day moving average crosses above your 50-day moving average, then we're calling that a crossover. And basically I call them all golden crosses. I think it's only when the 50 crosses over the 100 or something that is technically a golden cross. But you know what? Once I get a crossover like we have at the green spot, you can see what happens with price action. Look at this big green candlestick. Let's zoom in again. The big green candlestick is the one that evokes this crossover. And as soon as there's that crossover, it moves straight into a consolidation. You wish it doesn't do these things, but you know what? It's price. What creates price action is how many buyers there are as compared to sellers. That's it. That's price action. But after this consolidation of, it looks like 8 minutes or so, what do we have? We still have that nice upward price action. And up here again, we have another bunch of consolidations. So you wait for the crossovers and then you enter your trade. Here's another crossover here, which I didn't highlight, because after this downside crossover where the blue, the smaller moving average crosses down below, see what happens again? Price action goes down. But look at this big one here. Crossover over here, and what happens? Price action plummets, literally. And so crossovers, make it part of your trading portfolio that you're looking out for your crossovers before you enter into your trade. Okay, welcome to the live stream. If you're new, say hi. Let's know where you're streaming in from. I always like to know who I'm talking to. It would be nice if I could see your faces, actually. Who knows? Technology might take us to that point where we can see each other live. Same way as you can see me. It would be nice if I could see you too. Okay, and then, so let's go back. So then the third breakout strategy is the pullback. The pullback is always occurring. Right? You have price action pulls up and then price action kind of retraces. So that is a fact of life with the charts. With candlestick patterns, we always have the pullbacks. Question is, are we utilizing these pullbacks? Are we letting them speak to us when we trade? The pullbacks are critical. And I think I have yellow, just one pullback. Yes, I think I have just one pullback on my chart. Okay. And that's enough because we have pullbacks all over the place. After a nice upward trending motion, once we have that, it's a retracement. It's almost like 4 steps forward, 1 step backward. And it's okay if it's just 4-1, or if it's 10 steps forward and 2 steps backwards. Then we call it a retracement. If it's 10 steps forward and 10 steps backward, we're going to call that a reversal. That is not fun. We don't want reversals. Hi Tunde again from Nigeria. Good to have you. Hit that like button, guys. It's the only way you can help me on this channel. Small YouTubers like us do appreciate those likes because they go far. They speak to the YouTube algorithm and they communicate. Your likes communicate with the YouTube algorithm and help to rank us better on YouTube. So ranking is what pays the bill. Okay, so we have that pullback. I'm going to zoom in a little bit. And guys, again, like I'm saying, pullbacks are the order of the day. My mouse is very sensitive today. And this pullback is important because what you want to look for, assuming you wanted to enter in on the upward swing, again, you missed it, or you want to increase your position size. So no matter what you're trading, you go in on, I don't know, 100 shares, 100 coins, 1,000 coins. You want to increase, you want to double your position, but there's the pullback. Oh, guys, always wait for the pullback. Now, one thing a lot of newbies do, and I had to train myself not to do it because it's hard not to do it, is to not enter on an upswing when price is like, when you have this green, it's hard not to jump in because FOMO sets in. You think, oh my goodness, this thing is going to the moon and it's going without me. I better jump in there and pick up, some coins, get a piece of this action, but you risk the pullback. So you pick up a coin right at this point. I'm gonna move this price. Let's say you pick up your coin right at this point on the uptick, and then you get hit by this retracement. See this retracement. Now this retracement, what if it ended up being a complete reversal, where price action just kept on going down, like zipping all the way down? Well, you entered in on the upswing. So you want to train yourself not to enter in on an upswing and to calm down. I constantly am speaking to myself to just stay calm, wait for the retracement. It will retrace, and when it comes back down, that's called the pullback. And once it pulls back, the minute it starts taking off again, that's when you begin to look out to get back into the trade. So you have the pullback, and then you have the breakout. It's going to pull back as it did down to this line here. Let's get this. It pulled back. And we have 1, 2, 3. We have 3 candlesticks refusing to break below. So that's a nice line of support. This is how you find your lines of support. You find your lines of support when price action hits a level and it doesn't fall below. It's a strong support level. There are trading bots buying up positions at the purple level, refusing to allow price action to break below it. So that's how you know this is a line of support, and you want to buy on the line of support. You don't want to buy on the line of resistance, so. And then the breakout. So those are the 3 strategies that I use every time, especially when I'm when I'm trading my futures, and I enter in, say, on say 25% of my position, but really I want to use 50% of my position. So I've entered in on 25% of my position, and then as soon as there's the pullback and the breakout. So the pullback, like again I said, you're at a pullback when you have price action just hitting it like a floor, like you see here. You're at this pullback where price action is. I'm going to draw another purple line here. This is how you know that you're at the bottom of this pullback. These 2 purple lines, you can see this creates the floor of this pullback. This here creates the floor of this pullback. And so the question from Kiana. Hi, Kiana. Where are you from? I like your name. How do we identify a pullback or a reversal? That's an awesome question. How do you know when price action is coming back against you? How do you know it's going to be just a pullback and not a complete reversal? Patience. You got to wait it out, because if it's a pullback, you will. Okay. The truth of the matter is the Fibonacci. So Fibonacci retracements. That is how I know whether I'm in a pullback or a retracement. Kiana from Los Angeles. Awesome. I have my daughter in Los Angeles right now with her girlfriend. And I don't know what's going on with Los Angeles, but my son, 2 months ago, not even 2 months ago, he went there as well with his friends. So I don't know what's going on in Los Angeles. Maybe I'll be heading down your way sometime soon. Must be a fun place to be. Okay, good to have you. A retracement is just going to be a slight pullback compared to the previous upward motion. Now, if you're a seller, then it's going to be the other way. After a downward trending action, the pullback is going to pull back up, but it should only pull back fractionally, and then it's a pullback. But if you really, really want to be sure it's a pullback, then you're going to need to use your Fibonacci levels. So whether it's a pullback or a reversal, when I'm in a trade, I use my Fibonacci's. So Fibonacci. Yeah. I'm trying to think if there's any other way of knowing. I mean, of course, you have your MACDs. And so with a MACD, guys, you got to study up on each of these indicators as I mentioned them. Many of you use the MACDs to trade, but you got to understand that the MACD also can show you whether it's a pullback or whether it's a reversal. So these are the indicators that should be on your charts to help you out to know whether you're looking at a pullback or you're looking at a full reversal. I don't know how else to say it. Let me get a clean chart. I mean, if you look at this, I see something. So let me draw this big triangle because I see this beautiful. Look at this. So, see this? So we have this downward trend in action, right? We have this nice downward trend. And then we have the pullback. Can you see the pullback? And it pulls back from there to there. Let's draw this. Okay, so between our two white lines, we have our pullback. Can we see? You see that pullback? And it literally pulls back 50%. If it kept on moving up, then it would be a complete reversal. If it ever comes back up above the top of this square and breaks up, then that's a reversal. And then you can enter into a long position. But it's only gone fractionally, and then it continues its downward trend some more. So see, so this is a pullback. This pullback is a continuation. It's a continuation price candlestick pattern. But if the Fibonacci, now since you did ask, this live stream is not about Fibonacci's, but because you asked, I will show you how I use Fibonacci's. It's always hard adjusting these, going from one time frame to another, because yeah. So you can see on my Bitcoin chart, I have my Fibonacci levels drawn already. I told you I trade with my Fibonacci's a lot. So this Fibonacci, let me see what I'm trying to do. Let's tighten it. Okay, so these price levels are my Fibonacci levels. Not all of them. Some of these levels I drew myself. So let me get rid of some of the ones. No. Okay, you know what? I'll start from, yeah, so this is the daily. Let me go to the weekly. Okay, now guys, this is the weekly Bitcoin chart. When I was doing the crossovers, talking about the crossovers, this is what I want to show you. Look at this. Look at this death cross. Can you see this death cross? Now, these time frames are pretty low, but let me attempt to show, yeah. So the 20, let's keep it at the 20 and the 10. You can see this cross, and what happens with this cross, price action just keeps on going down. So this is the weekly. So if you were, I mean, just look at the beauty. Look at this bull run. We're all privy to this bull run. This was awesome. You wake up in the morning and, you know, you've made profits. But we had this, you can see the consolidation going on at the top. And then we had the cross, and we've been experiencing Bitcoin just constantly heading down. It looks like we've hit a bottom. Can you see there's a lot of oscillation going on? Bitcoin has been at this, look at it, at this white level for, now each candlestick here is a week, guys. This is how you know that this is a pullback. Can you see it? If it was a retracement, we'd have Bitcoin all the way back to this price level at the bottom. But that would be scary. We'd have Bitcoin all the way back at 10,000. Then that is a reversal. But we see that Bitcoin ran up, pulls back partially. Yeah? Okay, but that's not what I really want to show. I want to show the Fibonacci levels. Kiana asked, I'm going to draw the Fibonacci level. So this indicator here on TradingView, find this indicator here. These are my shortcuts here I have up here. But this one is your Fibonacci. You hit your Fibonacci and then you draw your Fibonacci levels from the lowest point to the highest point. Usually what I will do, instead of drawing to the top of the wick, I will draw to the top of the body there. And here, voila, I have my Fibonacci levels. Each of these levels are simply support and resistance lines. That's all. So instead of you trying to identify this a support, this a resistance, the Fibonacci level helps you draw it. So I'm going to get rid of my white line here. Okay, these are Oh, I moved it. I shouldn't have moved it. Let's go back there. This is how we know it's a pullback, honey, because 50%, this is the key. You want, for your pullback, you don't want a pullback going more than 50% of the upward swing. And can you see what's going on here? Price action of Bitcoin came down, down, down. But when it got to this orange, no, it's not orange, this yellow level, which is the 50% Fibonacci level, what does it do? It doesn't drop further. It attempts to drop, and every time it attempts to drop, it just runs back up. And so this 50% is the line you want to look at to let you know that it's just a retracement. Even though we've seen a lot of dumping of Bitcoin, it's still only a retracement. If Bitcoin should continue downwards, then we want to keep an eye on this next level, which is the 61.8. Guys, if Bitcoin should drop below 61.8 price level, which is, let's see, I think that's 27,000. 27,000. If Bitcoin should drop below 27,000, it's not going to be a happy day for a lot of crypto enthusiasts. That's all I can say. But thankfully, it is hovering at the 50%. So what we're looking at is I'm looking forward to this nice retracement. And a lot of traders are believing that, a lot of investors and a lot of institutions now are believing that Bitcoin is going to 100K. So 30,000 is going to be history. And if you pick up some Bitcoin at 30,000, you'll be able to tell your grandchildren when Bitcoin then is like 500,000 that, once upon a time when Bitcoin was 30,000, your grandpa or your grandma picked up a bunch of coins, and that's why you can go to college today. So, yeah. So what else do we have? Best time frame to use to identify a pullback reversal. What time frame should we use for Fib? The best time frame to use to identify a pullback reversal. I always find that question difficult to answer simply because I use all my time frames. All my time frames are meaningful and I use them all. So your smaller time frames are the time frames you look at if you're trying to scalp. You want to get in a trade and in and out. 1, 2 minute, 5 minute. My 15-minute time frame is usually the time frame that decides whether I should stay in a trade or exit. So again, I'm only talking about trading, guys. I'm not talking about long-term investors. As a long-term investor, you don't care, or I don't care what Bitcoin does. I'm holding Bitcoin, period. And the same for my other coins that I'm holding long-term. But as a trader, my 15 minutes. So in answer to your question, Kiana, I personally use the 15-minute to decide if game is over. So if price action continues above the 15 minutes, above a cross on the 15-minute, then I'll stay in the trade. But once I get a death cross on the 15-minute, a breakdown So the opposite of a breakout is a breakdown. So down out of the rectangle, then yeah, it's over for me on the 15-minute. But that's because I day trade. So my 15-minute, now the daily, I don't think you should even trade without like having your daily time frame. Once I get a request to look at any coin, the first thing I'm going to look at is the daily. I just want to have that overarching picture of what's been going on, and the daily does a good job. The daily does a good job of that. So let me see if I can get back. So that's it, guys. That's it for my part of this live stream. Your part is the questions. Do you have any questions? Let me move this so I can see better. So Kiana, that was a very, very important question as far as time frames. There is no, I don't find that there's any best time frame, but I have go-to time frames. My 1 day is my go-to to get that general picture. Of course, the weekly, the monthly also zooms you out even further. Like right now, we're looking at the weekly on Bitcoin. We get an overarching picture of what Bitcoin's been doing. Well, Bitcoin's been, been excited these past few weeks, just moving up and down and going nowhere fast. Just kind of jumping. Imagine a child on a trampoline. That's what I see Bitcoin's been doing over the past like 8 weeks, 2 months. Just jumping up and down, up, down, not really going anywhere. So the weekly is so important. The daily also gives me a good picture of what's going on. I got to remember, I think it was the 1 minute. Let me go back to my 1 minute. It's so hard moving from a weekly. Okay, I've lost my original charts, but never mind. So that's it. These 3 breakout strategies, honestly. And Kiana, just search for Fibonacci levels on my channel. I actually made 2 videos on how to use the Fibonacci's to help you trade profitably. No point trading if you can't be profitable, right? So our goal is to be profitable as traders. Otherwise, everything we do is a waste of time. So yeah, go to my channel, search on Fibonacci levels or Fibonacci, I forget what I called it, but there are 2 videos, and study up on the fibs and how to use them in your trading. Yes, and I'm gonna Oluwatoyin, yeah. Yes, definitely. She asks, are we gonna have this recorded and posted in YouTube, on your YouTube channel? Yes, we are. I think most live streams are wired that way. So as soon as the live stream is over, it creates the video, and then I have to upload it onto YouTube. So which is what I usually will do. So yes, you'll have access to this. Any other questions? If you have no questions, at least hit the like button. It's the only way we can make this interactive. To make this interactive, you guys have to hit the like button or comment or say something whilst I talk. So it's not just a one-way stream. I would like to think live streaming means there's communication 2 ways. Like button, hit it, comment, hit it, say hi in the chat box. And I hope I've helped you a little bit today with your trading strategy. Let's know about it. Come back same time, same place next week. Let me know how you've been using the breakout strategy, the crossover, so the golden crosses and the death cross, yeah, as well as the pullback strategy. The pullback strategy, you want to look into your Fibonacci's, so you know whether we're looking at a pullback or a complete reversal. And I hope to see you guys same time, same place next week. Take care and enjoy the rest of your weekend.